Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you to build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the German factory orders month over month related to Eurozone or Europe. And the currency pair to focus is the euro dollar currency pair. Next important financial news announcement was unemployment rate in Canada. And we're going to discuss the USDCAD currency pair. So these are the last week macroeconomic events and important Forex news. So let's get started. Number one, let's start with the German factory orders month over month, Europe. So what is German factory orders? German factory orders month over month measures the monthly change in new orders placed in German manufacturers. It is a key leading indicator for industrial activity. Forex people usually listen to this news event, and basically we get factory orders signal. They try to provide us a future production signal, business confidence, and export demand in Germany. Germany is the largest economy in Europe. A stronger than expected reading usually supports the euro as it signals rising industrial demand and stronger economic momentum, which can push the euro USD higher. A weaker result may indicate slower manufacturing, weaker exports, and lower growth confidence, which can put downward pressure on the euro. Now, let me look at the financial news event details. On April 8th at 6 a.m. UTC time, we got the news announcement. The previous number was minus 11.1, forecast 3.0%, and the actual number we got is 0.9%. The currency pair we're going to focus is the euro dollar. So the actual reading came at 0.9%. The actual reading came at 0.9%. This was below the forecast but significantly higher than the previous minus 11.1%. This number showed a partial recovery in factory orders, though not as strong as expected, but still it's not a negative number. Normally, a lower than forecast reading is negative for the euro. However, euro USD moved higher after the release. This suggests the forex market focused more on the sharp improvement from the previous negative reading rather than the miss versus forecast. The rebound from minus 11.1% to 0.9% reduced concerns about deep industrial weakness. The market reaction analysis. After the news announcement, euro dollar currency pair moved up. Let me show you the price chart of euro USD currency pair. Here's the chart of euro dollar, and you can see euro USD is currently going up. So right over here, this is where we got the news announcement, and then market keep going up even after the news announcement. The bullish move indicates that selling pressure on the euro remained limited. Forex traders likely viewed the data as a recovery signal, despite missing expectations. The currency market may have already priced in a stronger rebound, reducing the negative impact of the lower than forecast result. Broader euro demand and US dollar weakness also supported the upside move. The key drivers behind the move. Actual orders came at 0.9%, the strong improvement from the previous negative 11.1%. Now, it did miss the forecast. The forecast number was 3.0%, but still showed recovery. Forex market focused on reduced downside risk in German industry. Euro USD moved higher despite mixed data. Now, let me discuss technical and sentiment considerations. Euro USD showed bullish momentum after the news release. Short term sentiment favored euro strength. Price action suggested buyers remain active. The move was supported by improving confidence in European data and broader market sentiment. Further direction depends on US dollar strength and overall risk appetite. The trading outlook and the perspective. Well, the short term bias turned bullish for the euro USD currency pair. Euro remained supported after the news data release. Further upside depends on continued dollar weakness and follow through buying. So, watch out for pullbacks if traders take profit after the initial move. So, it's quite possible. I was expecting this bullish breakout. This is what I've told you last week. So we got a nice bullish breakout over here, and then market actually, rallied up. It did go up. Okay, so we might get a pullback, or the way I see market is probably going to rise up even further. Okay, the overall analysis and key takeaway is German factory orders month over month rose to 0.9%, improving sharply from minus 11.1%, but missing the 3% forecast. Despite the miss, Euro USD moved higher as traders focused on the strong recovery in orders and reduced downside risk. Market sentiment remained supportive for the euro. Final key takeaway is the previous number was minus 11.1%, forecast 3%. The actual number we got is 0.9%. German factory orders missed expectations but showed strong recovery, which supported Euro USD as market sentiment favored US dollar euro strength. Next important news announcement was unemployment rate in Canada. And let me discuss about it. So, what is unemployment rate in Canada? The unemployment rate measures the percentage of people in the labor force who are actively seeking work but cannot find a job. It is a key financial economic indicator. Rising unemployment may reflect slower business activity and weaker consumer spending. Lower than expected rate usually supports the Canadian dollar as it signals stronger labor market conditions and economic momentum. A higher than expected rate may weaken the Canadian dollar as it raises concerns about slower growth. USD CAD moves based on how the data compares with expectations and overall market sentiment. Now comes the event details. The unemployment rate in Canada last week on April 10th at 12:30 p.m. UTC time, we got this financial news announcement. The previous number was 6.7%, forecast 6.8%. Actual number we got is 6.7%. The currency pair we're going to focus is the USD CAD currency pair. The actual reading came at 6.7%. This was better than the forecast and in line with the previous reading. It showed that the labor market remains stable and slightly stronger than expected. Let me show you the price chart of USD CAD currency pair. This is the price chart of USD CAD, and this is what I was expecting the market to, kind of print a top and starts the decline. And we did get that decline, a break to the downside, then a retest, and then market is going down further in USD CAD currency pair. Market context and release outcome. Let's discuss this. Normally, a lower than forecast unemployment rate supports the Canadian dollar. After the financial news release, USD CAD moved down. This indicates Canadian dollar strength as Forex traders reacted positively to the better than expected data. The stable reading reduced concerns about labor market weakness. Market reaction analysis. USD CAD moved lower after the announcement. The move suggests strong demand for the Canadian dollar. Forex traders likely viewed the data as supportive for the Canadian economy. The fact that unemployment did not rise as expected strengthened confidence in CAD. Broader market sentiment and possible US dollar weakness also contributed to the downside move. The key drivers behind the move. The actual unemployment came at 6.7%, better than the forecast. The forecast was 6.8%. So I would say stable compared to the previous reading. Improved confidence in Canadian labor market. USD CAD moved lower due to Canadian dollar strength. Technical and sentiment considerations. USD CAD showed bearish movement after the release. Short-term sentiment favored Canadian dollar strength. Price action suggested sellers remained in control. Further direction depends on US dollar performance and overall market sentiment. Trading outlook. Short-term bias turned bearish for USD CAD. Canadian dollar remained supportive after the news release. Further downside depends on continued US dollar weakness and follow-through selling. Watch for pullbacks if traders take profits. Overall analysis and key takeaway is Canada's unemployment rate came in at 6.7%, better than the 6.8% forecast and unchanged from the previous reading. This stable and stronger than expected data supported the Canadian dollar. USD CAD moved lower as Forex traders reacted positively to the labor data. Final key takeaway is the previous number was 6.7%. Forecast 6.8%. Actual number we got is 6.7%. Better than expected unemployment data supported the CAD, pushing USD CAD lower as Forex market sentiment favored the Canadian dollar. Now, let us take a look at previous week global market trends. I'm going to discuss the Euro USD and USD Swiss franc currency pair. Okay, let's go over to a price chart first. So let's take a look at euro dollar. The way I see euro USD is most likely going to rise up more. There are two possible scenario. One scenario is market is going to keep moving up, which I don't think it's actually going to work. The way I see market is probably going to uh, rise up, but the decline is probably going to happen after that. So some sort of a bullish rally, and then expect a top and a drop in euro dollar. Next one is the US dollar Swiss franc. So USD Swiss franc currency pair. This is what I discussed. We got a bullish breakout above this old swing high, just a spike in the market, and then this is a clear break of the trend line over here. Let me delete this trend line, draw a new trend line. So this was the trend line. Okay, and we got a break to the downside. Now, the way I see US dollar Swiss franc is falling down, and I expect further weakness in price action of US dollar CHF currency pair. But after a while, it's quite possible that US dollar Swiss franc is going to print a bottom. We have some decent size support over here at 0.7746 and maybe a little bit down over here at 0.7659 area. Next, let us take a look at current week's macroeconomic events and data releases. I will be covering key development in Forex market with a focus on fundamental analysis. The first one is the industrial production month over month in Europe, and we're going to focus on euro dollar currency pair. So these are the upcoming important Forex news announcements. So the first one is going to happen on April 15th, 9 a.m. UTC time. Second one is the April 16th, 1:30 a.m. UTC time, unemployment rate in Australia. Let's start with the first one. So industrial production, M over M. M over M means month over month. It's just a short word, an abbreviation. So what is industrial production, M over M in Europe? Industrial production, M over M, measures the monthly change in the total output of factories, mines, and utilities across Europe. It is an important financial indicator of economic activity because it reflects the strength of the industrial sector and its contribution to overall GDP growth. A stronger than expected reading typically supports the euro as it signals increased production and improving economic conditions, which can push euro USD higher. A weaker result may indicate slowing industrial activity and weaker economic momentum, putting downward pressure on the euro. Now, let me discuss about the event details. On April 15th at 9 a.m. UTC time, we are going to get the number. The previous number was minus 1.5%. Forecast is positive 0.3%. Actual data not yet released, but it is going to be released on April 15th, tomorrow, as today is April 14th. Now, let me discuss market context and pre release expectations. The previous reading of minus 1.5% showed a decline in industrial output. The forecast of 0.3% suggests a modest recovery in production activity. Forex traders will closely monitor whether the data confirms a rebound or signals continued weakness. A stronger than expected reading may support the euro. A weaker than expected result could weigh on the euro and push euro USD lower. Well, it's already going down. Forex market participants will also consider US dollar strength and broader risk sentiment. Now, why Euro USD could move? Well, the key drivers for price action include actual data versus forecast and previous reading, signals about economic recovery in Europe, implications for ECB, policy outlook, short term euro momentum and positioning. Even small surprises can trigger volatility. Industrial production is a key economic indicator of economic strength and future growth. Now, technical and sentiment considerations are Euro USD may see increased volatility around the financial release time. Currency traders often combine economic expectations with key technical levels. For example, we got this nice downtrend and then a bullish breakout and price action rallied up. But we have some resistance levels coming over here. Here's the first one, and then we have a second one resistance level right up over here. Market sentiment and US dollar direction will influence the market move strength and sustainability. The trading outlook. Neutral bias before the release. Upside potential is there if data beats expectations, supporting the euro. Downside potential if data disappoints, weakening the euro. Expect short term volatility during the release time. Watch the initial reaction and possible retracements. Overall analysis and key takeaway is Europe's industrial production month over month is expected to recover to 0.3% from the previous minus 1.5%. This financial news release is important for assessing the strength of the European industrial sector. Forex traders should monitor the data closely and adjust positions based on the outcome. Final key takeaway is the previous number was minus 1.5%, forecast 0.3%. The actual data not yet released, but it's going to be released tomorrow at 9 a.m. UTC time. So stronger than expected production may support the euro USD. Weaker than expected data may put pressure on the euro. Next one is the unemployment rate in Australia. What is unemployment rate in Australia? Let's discuss this. The unemployment rate measures the percentage of people in the labor force who are actively seeking work but cannot find a job. It is a key economic indicator that reflects the strength of the labor market and overall economic conditions. A lower than expected unemployment rate usually supports the Australian dollar as it signals strong employment conditions and economic stability, which can push AUD USD higher. A higher than expected rate may weaken the Australian dollar as it suggests slower economic activity and reduced consumer spending, putting downward pressure on the AUD USD currency pair. Now, let me discuss even details. The unemployment rate in Australia, the previous reading was 4.3%. Forecast is also 4.3%. Actual data not yet released. Now, market context and pre release expectations. The previous reading of 4.3% showed stable labor market conditions. The forecast remains unchanged at 4.3%, indicating expectations of continued stability. Currency traders will watch closely for any surprise in the news data. A lower than expected reading may strengthen the Australian dollar. A higher than expected reading could weaken the AUD and push the AUD USD lower. Now let me show you the price chart of AUD USD currency pair. As of today, AUD USD is actually moving up, and I was expecting a pullback, by the way, but this pullback actually kind of rallied up a little bit higher. Why AUD USD currency pair could move up? Well, the key drivers for price action include actual unemployment versus forecast and previous reading, implications for Reserve Bank of Australia policy outlook, short-term AUD momentum and positioning, overall US dollar direction and risk sentiment. Even small deviations from expectations can trigger volatility. The unemployment rate is a closely watched indicator for currency markets. Let me discuss technical and sentiment considerations. Australian dollar versus US dollar may experience increased volatility around the release time. Forex traders often combine economic expectations with technical levels to plan trades. Market sentiment and US dollar strength will influence the direction and strength of the move. For the time being, as far as the trading outlook is concerned, my bias is neutral before the news release. Upside potential if unemployment comes lower than expected, supporting the Australian dollar. Downside potential if unemployment rises above forecast, weakening the Australian dollar. So expect short term volatility during the news release time. Watch out for initial move and possible retracements. Overall analysis and key takeaway is Australia's unemployment rate is expected to remain unchanged at 4.3%. This suggests stable labor market conditions. The release will be important for short term Australian dollar sentiment and AUD USD direction. Forex traders should watch for any deviation from expectations. Final key takeaway is previous 4.3% number forecast is 4.3%. The actual data is going to be released. A lower than expected unemployment rate may support the AUD USD currency pair. A higher than expected unemployment rate may push pressure on the Australian dollar currency pair. Now, let us take a look at current week Forex market trends. I'm going to discuss the euro dollar, USD CAD, USD Swiss franc, and spot gold. So let's start with the euro USD currency pair. As far as the euro dollar currency pair, we got this bullish breakout over here, and then market dropped, then rallied back up. So it's quite possible that price action is going to test 1.1919 price level over here, and then we might get a top and a drop in price action. If we take a look at a 4 hour time frame, let me remove all of these levels. Price action, you just keep going up over here, and let me add some stuff over here. This is the zone right over here. This is the zone or an area which might provide some sort of support. Okay, so this area is probably going to provide some sort of resistance. And if euro dollar just keep going up and take out this resistance level, then the next resistance area is right up over here. So these are the two sell zones that I have for the euro dollar. So once market is going to hit these levels, it's quite possible that price action is going to drop, at least on a short term basis, or we might even see a complete reversal in market as well. That's also possible. Next one is the US dollar Swiss franc. USD Swiss franc, this was a break to the upside. Market rallied up. We closed two consecutive bullish candlesticks over here, and then market is trying to retest. So last week I told you guys that USD Swiss franc is probably going to drop, so it's falling down. So price action is probably going to drop a little bit more, retest this trend line over here, and then it's quite possible that we're going to see a bullish move after that. So regarding the US dollar Swiss franc, market is falling down. This is the support area over here. Then we also have some more support zones down over here. So these are the levels we need to wait for the market to test, and then we might get a bounce back up. Next one is the USD-CAD, US dollar versus Canadian dollar. Okay, this is the USD-CAD currency pair long-term chart over here. This was a nice breakout over here. Then market kind of rallied up. Then it's trying to drop. So the way I see market is probably going to find some sort of support over here at around this area, this yellow color highlighted area. The price value is 1.3698. If we take a look at a 4-hour time frame, this is a nice break to the downside, and is a break to the downside, then a retest, and then market is going down after that. Next one is the spot gold XAU USD pair. Spot gold, the trend is down overall, but it's kind of going to move sideways. So I expect bullish rally first in XAU USD pair, and then expect a top and a drop in the price action of gold. Okay, let me see if you guys have any questions or comments. And if you have any questions or comments, feel free to type inside the chat box, and I will be happy to answer your questions. Hello, everyone. Okay, DCA effective? No. USD CAD is actually a commodity currency, which I covered. As far as the question related to oil, the trend is up in crude oil. Okay, so it's an uptrend in oil. Okay. As far as the risk is concerned, well, I discussed about the euro mainly. The euro is moving up, but we also have some resistance area as well. So it is an uptrend on a short-term basis, but it's quite possible that market is going to find some resistance over here in euro dollar currency pair. And once market hit those levels, we might get a top and a drop in price action. So let us review what we have learned today. We'll discussed about the industrial production related to Europe, unemployment rate in Australia, and also discussed about the Euro USD, AUD USD, USD Swiss franc, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading course for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, April 21st at the same time. That's all from my side for now. Have a great day and goodbye.